Have you ever looked at a company that's posting huge profits, only to hear that it's in serious financial trouble? It seems like a paradox, right? Well, today, we are going to pull back the curtain on that mystery. We're diving into the statement of cash flows, the one report that truly shows you where a company's money is actually going. All right, first things first, let's tackle this huge idea, the paradox of profit versus cash. This is all about the massive difference between looking good on paper and having actual spendable money in the bank. And believe me, that distinction can mean everything. So let me just ask you this straight up because it sounds kind of crazy. Is it possible for a company that's reporting record-breaking profits, a company that looks like a huge success, to actually run out of money and go completely bankrupt? And yeah, the answer is a big, surprising yes. You see, high profits on paper don't mean a thing if you can't pay your employees, your suppliers, or keep the lights on. Profit is an accounting opinion, but cash, well, cash is fact. I love how this slide puts it. Think of net income, or profit, as the story the company tells you. It's an opinion shaped by accounting rules. But cash flow, that's the reality. It's the hard, cold fact of what money actually came into the bank account and what money actually left. No interpretation needed. So how do we get to that reality? How do we fact-check the story? Well, we use a special tool, one that acts like a financial detective. And that tool is the statement of cash flows. And what it does is pretty simple, really. It tracks every single dollar that comes in the door and every single dollar that goes out over a certain amount of time. It's the complete, uncensored story of a company's cash. There's nowhere to hide. Okay, but that brings up a really good question. When we talk about cash in this context, what are we really talking about? It's actually a little broader than just the bills in your wallet. Right, so for accounting, cash is a mix of a few things. You've got your physical cash and bank balances, of course, but you also have something called cash equivalents and even restricted cash, which is money set aside for a specific purpose. Let's zoom in on those cash equivalents for a sec. So a cash equivalent is basically anything that's almost cash. We're talking about super safe short-term investments, things like treasury bills or money market funds. The big rule here is that they have to be convertible back into cash within 3 months from the day the company got them. So it's money that's ready to go at a moment's notice. All right, now we know what cash is. So let's see how the statement actually organizes all this movement of money. It doesn't just throw a giant number at you. It breaks it all down into 3 key activities. And this is a great way to think about it. To make sense of everything, the statement of cash flows sorts every single transaction into one of 3 simple buckets. This doesn't just tell you how much money moved, it tells you why it moved. The first bucket, and honestly the most important one, is operating activities. This is the cash that comes from the company's main business, selling its products or services. Think of it like the company's salary. If a company is healthy, you really want to see this number be positive, consistently. Bucket number 2 is investing activities. This is where you see the cash being spent on the future. We're talking about buying big-ticket items like new buildings, machinery, or even investing in other companies. This is the money a company uses to grow and improve. And finally, our third bucket is financing activities. This tracks the flow of cash between the company and its owners and its lenders. So money coming in from, say, selling stock or taking out a bank loan, and money going out to repay that debt or pay dividends to shareholders. It's all about how the company is funded. This table just lays it all out so clearly. You can really see the whole story here. Operating cash is the engine of the business. Investing cash is how it builds for the future. And financing cash is the fuel it gets from outside sources. Each bucket tells a crucial, different part of the story. Okay, so we get the structure, the 3 buckets. But let's bring this back to the real world. Why should you care? Why is this statement so incredibly important for making smart decisions? Because at the end of the day, the statement of cash flows answers the questions that really matter. Can this company actually pay its bills? Is it funding its own growth, or is it borrowing money just to stay afloat? If you're a lender, this tells you if they can pay you back. If you're an investor, it tells you if those dividend checks are for real or if they're about to dry up. We're almost done, but there's one last little detail we need to cover. When you're looking at that all-important operating activities section, you might notice that companies can present it in one of 2 different ways. And just to be super clear, this choice only applies to the operating section. Investing and financing, they're always presented the same way. No confusion there. So you've got 2 flavors here. The direct method is pretty straightforward. It literally shows you cash we got from customers, cash we paid to suppliers, and so on. The indirect method, which you'll see way more often, is a little different. It starts with that net income story and then makes adjustments to work its way back to the cash reality. But here is the absolute key takeaway on this. It does not matter which method a company uses. They are just two different paths to the exact same destination. That final number for net cash from operating activities will be identical no matter what. It's just a difference in presentation.
And that really brings us full circle. We know the income statement tells a story, and it can be a very persuasive one. But the cash flow statement, that's the fact checker. So the next time you're sizing up a company, let me ask you, are you going to read the story or are you going to check the facts first?